Imagine betting big on industries that most investors avoid. And what if that bold move could lead to staggering returns? Today, we're diving into Mohnish Pabrai's latest investment portfolio, a masterclass in contrarian investing. Stay with me as we uncover why this super investor is betting heavily on energy and how you can apply these insights to your strategy. Welcome back to the Super Investor Portfolio series. In this second episode, we explore the fascinating world of Mohnish Pabrai, one of the most disciplined and thoughtful investors alive today. Pabrai is renowned for his Warren Buffett-inspired value investing approach, focusing on high-conviction bets and patient capital allocation. Pabrai isn't the person who's afraid to concentrate his portfolio into a few industries, trusting his rigorous research and instincts. If you enjoyed my analysis of Michael Burry's Q3 portfolio, you should like this deep dive into Mohnish Pabrai's latest moves. Also, if you haven't yet, consider subscribing to not miss out on the next Super Investor Portfolio overviews. So, before we dive into Mohnish Pabrai's portfolio holdings, it's crucial to note that the information I am analyzing comes from his 13F filings. These filings only cover investments in US listed securities, which means they don't paint the full picture. Pabrai's disclosed portfolio is valued at around $250 million, but in reality, his total portfolio is closer to $1 billion. This suggests that he holds significant international investments, which aren't represented in the 13F filing data. However, even with this limited scope, there's plenty to unpack about his concentrated high-conviction bets. Alright, now, let's get into it by breaking down his portfolio holdings. At the top, Pabrai's highest conviction is in Alpha Metallurgical Resources, the largest holding making up almost 46% of his total portfolio. At the second place is Consol Energy, with almost a third of his portfolio investments. The third largest position is Warrior Met Coal, making up almost 20% of his portfolio. Additionally, Pabrai holds two smaller positions in Arch Resources and Danaos Corporation. This concentrated portfolio showcases Pabrai's hallmark style, bold bets on industries that many investors shy away from. His focus on metallurgical coal and strategic addition on Danaos suggest a mix of confidence in specific sectors and selective diversification. Alright, now let's dive deeper into each of his holdings. To start off, Alpha Metallurgical Resources specializes in the production of metallurgical coal, a critical component for steel manufacturing. During the third quarter, Pabrai added almost 7% to this position, making it Pabrai's largest holding with almost 46% of his portfolio. This highlights his confidence in the company's ability to benefit from global demand for steel-making materials. Now, let's look at the positives and negatives of the company. First of all, AMR maintains low debt levels, sustainable cash reserves, ensuring financial stability and resilience in volatile markets. Additionally, the company's high profitability ratios and solid margins reflect effective management and operational excellence. But what I found the most attractive about the company is that AMR trades at low valuation multiples, suggesting potential undervaluation relative to its earnings, making it appealing to value investors. When it comes to cons, the company's net income and earnings per share have experienced significant fluctuations, which could deter risk-averse investors. Additionally, AMR's heavy reliance on commodity prices exposes it to swings in market demand and potential regulatory challenges targeting the coal industry. Consol Energy is a diversified energy company involved in production of coal and natural gas. As the second largest holding in Pabrai's portfolio, at 32.66%, Consol Energy showcases his confidence in the continued demand for traditional energy sources. The dramatic 350% increase in shares reflects Pabrai's bullish outlook on its future prospects. When it comes to pros, CONSOL Energy benefits from operating in both coal and natural gas markets, reducing its dependence on a single resource. Additionally, the company's strategic investments in modern mining and natural gas productions ensure efficient operations and steady output. Finally, CONSOL Energy is a well-established player in the energy sector, with a reputation for reliability and strong customer base. When it comes to cons, as a producer of coal and natural gas, CONSOL Energy faces increasing regulatory scrutiny and environmental challenges, which could impact operations and profitability. Also, fluctuations in coal and natural gas prices can lead to revenue instability and investor uncertainty. Finally, with the global push towards renewable energy, CONSOL Energy may face challenges adapting to transitioning energy landscape. Warrior Met Coal is a leading producer of high-quality metallurgical coal used in steel production. With an 18% allocation, HCC is the third largest holding in Pabrai's portfolio. The 48% increase in shares signals a strong belief in the company's role supporting global steel manufacturing demand. When it comes to pros, HCC is renowned for producing premium-grade metallurgical coal, making it preferred supplier for steel manufacturers. Additionally, the company benefits from robust global export market, diversifying its revenue sources across various regions. Furthermore, HCC maintains low-cost production capabilities, contributing to stable margins even during challenging market conditions. When it comes to cons, like most coal producers, HCC's revenues are highly dependent on volatile coal prices, influenced by global supply and demand. Also, the coal industry faces ongoing regulatory and environmental pressures, which could impact HCC's operations over time. And of course, cyclicality. As HCC's fortunes are closely tied to the steel industry, any downturn in steel production or demand could negatively affect the performance. Arch Resources is a prominent coal producer, specifically focused on metallurgical and thermal coal. The 92% reduction in shares suggests Pabrai is reassessing the potential of Arch, possibly reallocating capital to higher conviction positions. When it comes to pros, Arch has low debt levels and maintains a solid cash reserve, providing financial flexibility to navigate market fluctuations and invest in future growth opportunities. Also, the company has demonstrated high profitability ratios, indicating strong operational management and cost control. Finally, with relatively low valuation ratios, Arch may be undervalued based on its fundamentals, presenting potential for growth if market conditions improve. When it comes to cons, Arch's revenue and earnings have been subject to significant fluctuations, largely due to market conditions such as coal price swings and demand changes. Just like other coal producers, Arch faces ongoing challenges with the coal industry, especially environmental concerns. Danaos Corp, a major player in the container shipping industry, specializing in leasing large container ships to some of the world's leading shipping companies. As a new addition to Pabrai's portfolio with a 1.6% allocation, Danaos represents a step toward diversification outside of the coal and energy sectors. When it comes to pros, DAC is one of the largest independent owners of container ships, giving it significant leverage in the global shipping market. Continued recovery in global trade and supply chain demand boosts the shipping industry, creating opportunities for growth. Also, DAC has relatively low valuation multiples compared to its earnings and book value, suggesting it could be undervalued. For cons, the shipping industry is highly cyclical and closely tied to global economic conditions, which can lead to revenue volatility. Also, Danaos depends on favorable charter rates for profitability, which are influenced by external market dynamics. Finally, as a capital-intensive industry player, Danaos has substantial debt obligations, which could pose risks during economic downturns or periods of rising interest rates. So, what stands out reviewing Pabrai's portfolio? First of all, over 96% of Pabrai's portfolio is invested into coal and energy companies, showing his strong belief in traditional resources. He is especially focused on metallurgical coal producers, which are essential for making steel. Despite the global move towards cleaner energy, Pabrai sees long-term value in these old-school industries. The large reduction in arch resources also supports this strategy. By cutting back on lower-priority investments, Pabrai is putting more money into the companies he believes in the most. This shows his commitment to staying focused on his highest confidence picks. Pabrai's Q3 portfolio reflects his belief in value investing. While many avoid coal and traditional energy, his strategy shows deep understanding of global industry needs and a willingness to go against the crowd. So what can we as investors learn from Mohnish Pabrai's Q3 portfolio? First, investing with high conviction. Pabrai's portfolio is a lesson in confidence. Instead of spreading himself thin, he concentrates his investments in a few industries he understands deeply. This strategy could lead to outsized returns, provided you do your research and understand the risks. Secondly, following a contrarian approach. While the world pivots to renewable energy, Pabrai sees untapped potential in coal. This doesn't mean you should blindly follow him, but it highlights the importance of looking where others aren't, because contrarian investing often uncovers hidden gems. Third, adapt your strategy. Pabrai's reduction in arch resources reminds us that even high-conviction investors need to adapt. Regularly reassess your portfolio, and don't hesitate to make changes when new opportunities arise. Finally, Danaos Corp shows how Pabrai balances concentration with diversification. While most of his portfolio focuses on energy, he's not afraid to explore other sectors that align with his investment thesis. Diversification is essential, but it should be strategic and intentional. To sum up, Mohnish Pabrai's Q3 portfolio is a fascinating case study in conviction, strategy, and adaptability. Whether it's doubling down on coal or exploring global trade, Pabrai's moves offer valuable lessons for any investor. And I hope that you took something from this video and will manage to incorporate it into your strategy. If you found this analysis insightful, don't forget to subscribe and comment with your thoughts down below. Which part of Pabrai's strategy do you find the most interesting? And who would you like me to analyze next in the Super Investor Portfolio series? And as always, guys, thank you for watching, and I hope to see you in the next one. Bye.